There are a lot of investment theses out there, but Samir Arora's Helios Capital believes that it's better to identify stocks that you should not invest in to find the portfolio that you should. I'm going to speak to him about which stocks he is actively avoiding and how he's constructing his portfolio right now. Let's go. So good to see you in your neighborhood.
Oh, no, very good. I like my neighborhood.
One of your neighborhoods. But so the introduction that I just gave was that your investment thesis in philosophy is about identifying stocks and ideas that you don't want to invest in.
Correct.
Right? So for those people that don't know about this, can you very quickly explain that? And then I want to get into a few aspects
By
of
the way,
market.
nobody has any other philosophy.
Right.
The whole world has only this philosophy. It's just that they express it differently because they want to show that, you know, what they buy with care and all that. But first they reject. So let me explain in simple terms. Mr. Buffett, suppose means he said, but once in a while he's violated it, that I don't buy tech stocks. He does not say, I studied tech stocks, I met the board, I met the management, I understood the prospects, and then I said, I don't want to buy it. He said, I don't like it, because in his mind, it has to be rejected out of hand.
Right.
So his highest conviction is not in what he bought, it is in saying that I don't like tech. Otherwise, you should say, I will study it, I study everything, and then I don't buy it. So even Indian, say, big mutual fund might say, I like value. We don't like loss-making companies. So you have first eliminated.
But
So I'm saying,
sure.
actually everybody's like that. It's just that the way our business works,
You do it more actively.
no, you say what you do.
Right.
You don't just say what the world wants. What the world wants is, we buy 20 companies which are so good, they have long-term this thing. We met the promoter, we looked in his eye, we saw the depth of his passion.
Belief and passion.
And
yeah.
my bet is that the promoter also does not know that he will succeed so much.
Yeah.
Therefore, according to us, it is easier to know what will do badly rather than to know what will do well in life. And ultimately, it's a sorting or a screening process. So in that screening, if you can eliminate the bad, which is easier to do, you are left with the pool which is more this thing, instead of directly trying to find the best company and the best management.
So by doing that, by the way, you've got a lovely office and look at that view. But by doing that, you limit significant capital loss. You limit the mistakes that you make.
So the idea is that there are say 500 companies in the index and the index return is X, let's say 14-15%, then broadly, because of the way averaging works, some half the stocks are doing better than 14 and some half are doing worse than 14.
Right.
And some 1/3 are doing much better than 14. And this is just, you can see in pure numbers for any market, and some 1/3 are doing very badly. So we say that it is very difficult to know ahead of time that which fellow will do well, because you will know it only with time. But it is easier to know what is, broadly speaking, a candidate for bottom 1/3.
Sure.
And if you can eliminate that, you can't totally eliminate, but if you can reduce that in the universe from being 1/3 to being 5%, 10%, that means if you buy 50 stocks, you will still get 2-3 very bad performers. But you should not get 30%,
Most of
which
your
is the
stock.
market. No, 30% is the market average.
Sure. But I do want to ask you about that. And the reason why I wanted to provide this context is I want your opinion on the IPO market as things stand right now. The companies that are coming in ultimately had to come in at some point. India is a growing economy, growing market, and more companies had to hit the market. But what do you think about the quality of the companies that are hitting the market currently when you put it through the lens that you use to evaluate your portfolio?
So in big picture sense, if I look at the mutual fund side, because we here don't even get as many anchor possibilities. So in this whole calendar year, they've taken 5 anchor positions so far out of whatever, maybe 60, 70, or maybe I don't know how many have gone. So you have to screen. But actually the guy who's ready to be IPO'd has already passed many tests.
Yeah.
Because or if all of these were, say, broadly private equity funded, there would have been 10x the number of companies that go public would have been funded. For example, food delivery must have been some 20 companies before, now 2 are left or 3. Or if you say, actually 2, I'm talking quick commerce, 3 maybe. If you talk about logistics companies, education companies, the fact that you've reached an IPO stage is broadly you have survived.
But doesn't it go against or have a cross against one of the metrics, which is valuation?
No, it's not. Because valuation can't be today's valuation.
You have to forward.
So first thing is, big picture, it should be obvious that whatever this guy is doing is very useful or different. It is not just. So we have to differentiate between an IPO, which looks like a new age company, but is actually an old age company, but has a better shop. Or a better, or all colors of all, or you've rolled up 20, you bought 20 unlisted guys and made it into.
What are some of those companies for you? And you've spoken a lot about these food delivery companies.
No, food delivery.
The platform companies.
There is a value which you can see. The value is they are protecting you from the pollution.
Sure.
Could be one value.
Sure.
They are saving you time. They are saving you parking.
Yeah.
They are saving you road rage. They are making you use Netflix better, because otherwise you spend
have more time.
Exactly. Now, if some fellow says, I can do it myself, that means his time is not worth it.
He
should himself become maybe a delivery guy.
And he was not part of that market anyway.
Yeah, there's enough market. No, I'm saying in all of these, not all of these, in the companies that you are buying, if it is a new age company, not all IPOs are new age, then it should be, this guy is doing something different. And so, for example, we bought Physics Wala. Now, Physics Wala, the annual tuition is 4,000 rupees. Annual.
But he's got scale.
That's what I'm saying. So 4,000, you can imagine, even if nobody wants to go even once, but they'll say, no, but you see, Baiju, what happened?
Right.
And that is what research you have to do. सब कुछ एक नहीं है. As with that way, I can find some fund we did very badly, and you will say, mutual fund maybe we should not put, because that happened to. That is not the way.
So what stocks, not stocks necessarily, but what ideas are you actively staying away from in 2025 November and heading into 2026 that you might have considered, say, last year? What has changed? Has anything changed?
So broadly, because we have these 8 factors on which we eliminate, usme 6 factors are more or less permanent.
Okay.
Because they are not related to pricing or valuation.
Can you enumerate them quickly?
So number 1 is if the sector we think is potential for disruption, or it could be industry competition or industry things, or it could be a theme which broadly we put infra type thing in that, where the government has a big role to play.
Sure.
There are so many of these waste management companies which come and will come.
Right.
Now broadly we will never buy them, because we know that all of them get municipal contracts. And we don't have to say on TV what happens in municipal contracts and what is the risk of, trying to have continuous growth in these kind of things where government is part of the thing. So there are so many. Then the 4th one could be that we know, or somebody told us and we now believe that the history is bad or the accounting is bad. Now these things don't change every day.
Sure.
But what changes every day is, so if you're not bad on any of these, but you could be expensive, or you could have very boring growth rate, like these days maybe in IT. So these things can change with time, either because the price changes or
the scenario changes.
So these things can change. But the first 6 broadly don't change for us.
So what has changed? Has anything changed?
No, so in those 6 nothing will change.
No, I'm saying.
In these now you can feel, but we still we are not convinced that IT should be bought. But you have to always keep an eye on that, and we are otherwise shameless in going, and at least in my long short fund, from long to short or short to long in 25 minutes. Yeah, I can do. So broadly, but right now we are not thinking that has changed, yes.
Okay. So I want to ask you how much risk you are apportioning to what could potentially happen in the US amidst this entire conversation of overvaluation in certain pockets. And not that it's related, but you see things drop very quickly. So for example, Bitcoin. The fact that it dropped in 6 weeks 30%, we've not seen a major crash in a long time. Does that worry you at all?
So the thing is, if you call things a crash, then it is worrying.
Sure.
But Bitcoin, I am not going to
No,
worry because Bitcoin in front of me went up whatever billion times, and I didn't have.
I'm just talking about how...
and I didn't affect my market.
Sure.
Otherwise, if it had gone up with Bitcoin,
yeah,
we could have said it'll go down with Bitcoin.
No, I'm saying about how quickly it can change.
So what I'm saying is, if the US does badly, but not crashes, that means suppose it is 0, -5, -10%, we all will be beneficiaries. But if it is falling 30%,
then we're going to get hit.
Then we are going to hit, because then we realized in 2008 that everything is connected at the end, because we are all in financial markets and everything is equity and all that. And then there are foreigners and all that. But otherwise, a normal underperformance or slightly bad, nobody cares, because when they were going up, we were not taken up along with them.
Yeah.
So that is why we are viewed, although I don't like that label, as an anti-AI play.
I wanted to ask you about that.
It's like saying that suppose when you were graduating, when you were leaving school, and your classmates decided that we will give you a prize for the ugliest guy graduating, and the prize is 50,000 rupees. Will you take that prize or no? It's a bad prize to have. Even if you're getting 50,000 rupees, that you say, yes, thank you very much for honoring me and giving me the whatever dumbest guy in the class.
Something to be proud
about.
Yeah,
no, it's a big negative, but because right now the market is desperate, we say, okay, if we are anti-AI play, come for that reason.
But okay, since we're talking about IT companies, there is a thesis or a theory that says that these are great cash-generating businesses, very large businesses, but they're not doing too much in the way of cutting-edge technology. They're not investing in...
So what is the P of, say, Power Grid or NTPC or guys growing at 8, 10%, 12%? That should be the P. Then you can generate cash.
Okay, so you're saying the multiples are not...
Then your valuations are... So now they say that these have reached... By the way, I don't oversay anything, because I might change in 20 seconds. I'm just saying today. But we are not short. Okay, that much also I guess. But because we have a very low weight, it's like philosophically short, but not short. So... either it has to go below average valuation. No, it is not enough to say that these guys are at 10-year average valuation, because if somebody is at 10-year average, there was a time when you were below average.
Yeah.
So today we think it should be a below average valuation, not at average, because the situation is not average.
Interesting. Okay, so that's the argument like basically. Okay, so let me.
Plus one more thing is there. Our portfolio is doing well. So if somebody's portfolio is not doing well, they get desperate to switch, because it's not that the money will come out of new source. That same $100 is invested somewhere. Now you're saying, don't do this, do that. So that also there's less.
Let me ask you then about what you have. And look, I've looked at the Helios FlexiCap fund as well, and you have a significant allocation towards financials and towards some capital market plays as well. The question on financials is, how do you see, or where do you see the opportunities in that pocket? Do you see it in the large banks? Why I'm asking this is, we've not seen the implications of GST 2.0 play out completely. Q2 for a lot of people was better than expected. There was some disruption, but a lot of companies are thinking of adding capex, and who funds that? Does it get funded through the bond market, or does it get funded through equity, or does it get funded through the banks?
So I don't think that funding of corporates is the big story.
It's the retail side.
It's the retail side, and in also just the fact that because of interest rate cut, the margins got reduced, and therefore the profit bottom line became 9-10% instead of 14-15% that they would normally have. So that will also, because it takes time to pass through the interest rate cut on the deposit side. So that is happening. And in general, if you also look at it from the market point of view, the fact that foreigners were big sellers, and foreigners mostly own these large cap names, and in these large cap there are three groups you can have. You can have IT, financials, or consumer. So this is a group that the FIIs own. In that, I don't think they are also overly interested in IT. And nobody's broadly interested in the big consumer anymore because of very low growth rates. So even from that point of view, financials, financials have a thumb rule. At least these banks and all, they'll grow 1.5 times GDP in nominal terms. So if you get 9-10% GDP, 14-15% coming back is very easy and very normal.
And so this is the steady state of your portfolio.
This is the high confidence in reasonable return portfolio.
Right.
And this, in aggregate, this year the returns can't be very high because the earnings are not very high for corporate.
But you like the bigger banks, not the smaller banks.
We like the bigger banks because the smaller banks have turned out to be absolute disasters. We started with so many private banks, and every guy who's fallen by the side, even with foreign investment and private equity investment, has not really been able to, because if you found something wrong in lending, in practices, in some corporate governance, it cannot change by changing one guy.
But having said that, your credit growth has now shifted to double digits, which is great. Yeah. But a lot of people are saying that that is fueled by gold loans. And that's the pocket that you're talking about. A lot of the smaller banks have a significant portion.
But you know, I'm talking about the guys who had this sort of new, like Yes Bank and all.
Yeah.
It has taken three years. Imagine that even in the large listed banks, I mean large banks, private sector banks, even a change of a CEO takes 2 years and your 2 years are gone.
Yeah.
It happened in HDFC, then it happened in Kotak.
Yeah.
That it's not that the previous guy who went and the new guy who went, there was such a big, but here the previous, not I'm talking about some gold ones, I don't know which one you're talking, but in general, where these new money has come in, it will take them 3 years to figure out who has to be trusted, who has to be fired from within the firm for bringing them to a situation, all these guys. So I'm talking in that
context.
The big picture is, and also this, we are calling it high confidence reasonable return. This we cannot put in the new discovery. That also once in a while we may have a bank on the other side.
Yeah.
Currently, we don't have a small bank which we
would
call...
What is in your discovery portfolio?
In discovery portfolio, in recent, actually, this year was very good. 4-5 of them worked from car trade to Ether, and then...
These are all IPOs?
190, no, we have... we have bought only Ether in the IPO as anchor. Others we have bought in the market. So another one is normally has been a good formula for us has been IPO which has fallen a lot. Okay, like it happened in Zomato or in the case of 197, which
Paytm,
or also car trade.
Right.
Car trade fell from 1600 to some 650.
Speaking of, and sorry to cut you off, but speaking of IPOs that fall after, I'm just wondering whether you think that posting a narrow profit or eking out a profit just before IPO is not as good as posting a bit of a loss ahead of IPO if you can control it.
So I think it just makes I don't know what others, but makes the social media totally hyped. If there's a small profit, the small profit means say 5 paisa EPS. Our guys will divide 100 rupees by 0.05 and say, oh, kitna hai, 5,000, kitna IPO ho gaya ji, P ho gaya, P ho. Or they will say, this P is 1,500 and my something else is 8P. So aise nahi chalta hai kaam. So you have to see a little bit ahead of time, maybe 2 years only. But one more angle is that if it is a new age company demanding or asking for new age wale multiples and making a loss, then you better not tell us that your growth will be 15%.
Yeah. So
which is what happened to one of these large companies that has just happened, just had an IPO, big valuation, but we will grow 15 to 20%. फिर कोई मतलब नहीं है. Then you have to grow 40%, 50% or 100% for 2-3 years. तब मजा आएगा.
And with a trajectory of when you're going to turn profitable.
So that's why I think that we have this game about competition in quick commerce and all. The number 3 guy cannot go public if the number and number 2 are not rocking in the stock market. If these guys don't understand, the market will make them understand that if the prices of the first 2 stocks are down 20%, the third guy has to go to 0 because nobody will let him go public.
Correct.
So what happens is when a new entrant comes, the market thinks it's competition. We think it is sanity because the publicly listed guy or about to be publicly listed guy has to say, this is my path to profitability. I used to make 100 loss. Now I made it 20 loss. And in 3 quarters, 8 quarters, I'll make 100 profit. You have to say it.
You have
as soon as you say it.
But there's a danger there.
The listed guy has to go up because that means the fight is over.
But having said that, even the projections that companies make, and the conversations that they have immediately after quarterly results. You've also written about this on social media. You've spoken about the first quarter results.
So, as a thumb rule, we give benefit of doubt to first quarter. कि first quarter तो अच्छा होगा. बेशरम आदमी अभी IPO करने आया है. But some even disappoint there. But still, I think the thumb rule, if you're just and everything in life is a thumb rule. इसकी यार ये पहले क्वार्टर में धोखा नहीं देगा. But some of them
do. Some of them do.
Some of them, but in this case, one of the cases, there was some logic. Okay, we had the GST issue and this and that. So, chalo, theek hai. But generally, you don't expect a guy to disappoint in this first or second quarter. That would be a bit.
Okay.
Too much of a.
So let me ask you this then, and we spoke about a potential crash and
potential crash.
But we spoke about
without going up.
We spoke about that, and we spoke about how you think that if there is a major crash in the US, there is no possibility that the Indian equity market will remain unscathed. There will be.
If there is a crash,
if there's a crash,
we are calling it 20-30%, not 5-10%.
I'm saying, okay, but my question to you is, in that situation, what would your approach in the Indian equity market be? Would you be an aggressive buyer because a lot of the stocks that you might have removed from your list on account of valuation suddenly become incredible?
You know that you can't say. It all depends now, because suppose we are
all hypothetical.
Suppose a mutual fund is having redemptions also. फिर क्या करेंगे? Nobody knows. What am I going to do today? Planning for a crash which I don't believe in, to buy a stock which today I don't know what.
So you don't keep cash.
नहीं. How much will it fall to? अभी क्या नहीं, ये बातें सोचने भी नहीं है. It's like many people ask me, what do you think of this company? मैंने कहा, is it listed? कहते हैं, मैं कहा, फिर मेरे से क्यों तंग, मुझे क्यों तंग कर रहे हो? Unless it's a competitor to something which.
And at some point it will.
Previously, they would ask me, what do you think of nanotechnology? मैं कहा, nanotechnology, मैं तो ध्यान भी नहीं दिया nanotechnology की तरफ, because they came and went and nobody knows where. What happened to nanotechnology?
Right.
No, we have no time. Listed universe. क्या खरीदना है, क्या बेचना है, क्या देखना नहीं है. That is the universe. What will happen after 2 years if it happens? And how will we react to it? Depends. If for this time we are doing very well, we'll have much more flows. We might be able to say we will buy this stock. Maybe we are doing badly or the market is doing badly and we are also selling. So I'll tell you quickly a story. In 2008, one of these endowment guys came to me and said, but you raised money precisely in September of 2008. मैंने कहा, but you didn't realize that precisely in 2008 September I had redemptions. कहते हो, yeah, that actually we were also ready.
So the net amount is not much.
करें क्या इसमें, हम क्या कर सकते हैं?
Okay. So then let's close this out with your lens of earnings post Q2 and heading into the second half. Were you personally surprised on the positive? Did you think that a large number of companies, I know that actually, you're bottom up.
This quarter has been good in general and not overly disappointing.
But do you see that continuing?
Yes. So actually the thing is, because there were, as I said, 3 big sectors. So one sector was financials, where because of interest rate cut and general little bit of slowdown because of last year, since then liquidity has been injected, CRR has been cut, all that. So वो एक चल गया थोड़ा. Second was consumer, where it was not working, but now you have this GST cut, income tax cut,
and it could get better.
And you could have this commission, वगैरह. So generally
the labor codes, etc.
And the IT growth is not very different, but maybe some people will feel that valuations are okay, but I don't think a big jump in this thing. But at least in the other two, there won't be more downgrades and more cutting. So this year we are still seeing 11-12% growth hogi, and next year maybe it can go back to the older range, which was 14-15%, which is a normal longer term corporate earnings growth aggregate. Now in that, you also have to compare it with interest rates, which means
the real rates.
Which means that the market is, we are expecting the market to grow 10-12%. That is because the interest rate is low. When so the differential, say versus 10-year government bond, will be say 5-ish. 5%, है ना? तो वो 6.5 है, तो आप कह दो 11-12 बन जाएंगे. इसमें कोई deep research नहीं है. I know people get very psyched. Oh, this fund manager has said we'll grow 10-12. How conservative? He is not conservative. That is what it is.
Your benchmark is nominal GDP.
And everybody knows it. And वो पहले जब वो 9% होता था interest rate 10 year, तो आपको जी 14-15% हो जाएगा. Oh, he's become very aggressive. Range is this only.
Sure. But it's basically, the bottom line is looking good next year.
Next year, definitely is looking good, because with this year, we have massively underperformed by nearly 30% against emerging market benchmarks. Secondly, one big issue on our head was Trump, because if you see the negative flow started in July, so that 25% is going, and now people are talking that it might be not 25% but maybe 15%, which means we'll have to give them something which will be considered as reform.
Yeah.
Even though it might.
So that'll be the next big trigger.
Some pool might feel ki, you've opened up, say, farming, but market will say reform, because we call anything opening up as a reform. And the third is that because of the pressure of the tariffs or otherwise, the government has done many things.
Sure.
साथ में interest rate cut, liquidity injection,
GST 2.0,
GST, interest rate cut, tax cut. So अब और क्या चाहिए फिर? And then after that you get normal growth.
Steady state.
Normal तो वही था. Unless something else crashes in the world, which is what. Unless it really crashes, it will be okay. That's right.
By the way, I absolutely love your office, and what a view.
And by the way, we saw this coming up because
you did?
I've been sitting on this chair since 2008 October or something.
But वैसे we've come to your office, now you come to ours.
We will do that. Thank you very much. Thank you.